morning, Sense of Things. It's Jeff and Ron here once again for another update of what's going on in the world. Ron, how are you, my friend?
Good. Got some fun stuff for today. Some more bad product designs for
Oh,
everybody to
God.
chuckle at.
Here we
I had
go
to take
again.
out one. I had to take out one because it was a little too non-Disney, and I didn't want to get more people upset than I have in the past. But they are fun. We should probably
Yeah.
just do a separate show of that. What am I going to tell
we'll save that for a late night edition, the
you?
Adult
Yeah,
Swim version
yeah. We're having a
of
cocktail while we're doing it.
Sense of Things Adult Swim. So,
Oh God.
all
All
right,
right.
so you want to kick
Yeah,
us off here?
yeah, let's dive in. I saw this and I had to look at this twice. So I don't know if this is like a verb and they're trying to encourage people to use
Do
the
it.
razors in a bad way, or this is just the name of the company or the brand. I'm not really sure.
Do it.
And by the way, there's 5 in case you're not successful the first time.
Yes, yeah, just in case they dull while you're doing it. Yeah, 5 of them.
Oh, okay. I got you. All right. So that's the razor blade.
Yahoo.
Then I was never a Harry Potter person, but I'm telling you, would you buy this for your kid?
That's the creepiest looking thing I've ever seen. What the hell is it supposed to be?
I think it's like a car, like it's moving on the broomstick and they're playing
Yeah, I get that, but I'm like, why is he blue?
I don't know, but I think the eyes are bugging me out more than anything else.
I'm with you. That's the creepiest looking thing I've ever seen.
Yeah, I'm not sure how many of these were sold, but
Yeah, I'm
and
thinking it's probably not a big
I
one.
don't know
Hey,
about
I like
you.
this.
Do you go to a sporting event? You don't feel like holding your pizza? It's a pizza pouch, folks.
Just you bring your pizza with you to the event, and it's like jewelry. So
Listen, I think Jeff Foxworthy would have a field day with this if you think you're a redneck or
you
whatever
might
the
be a
hell.
redneck if you have a pizza pouch, I'm thinking. So now the
I'm,
only thing is the pizza pouch, I think, is an extra accessory to the hat that's got the 2 beers in it that you drink out of.
right, I get it. I'm thinking, what if you got a whole pie? It'll look like a wall clock on your
Yeah.
chest. I,
You just get the big thing in
I mean,
front of
who's
you.
coming up with this crap? But then
Yeah.
again, look at the name of the brand, right? It's
Stupid.
idiotic. So
I like
I'm just
this.
saying, I think people come up with this stuff because Ron Popeil didn't come up with it.
Yeah, and of course you've got the paper thing in there that's got stupid idiotic on it, but to make sure that the person wearing this is stupid idiotic, it's still emblazoned across the top there.
Maybe it's a Halloween gag thing. Who knows?
Wow.
All right. And then to get a little more serious. So we've done this before at the CNN Business, the
Mm.
Fear and Greed Index. And I wasn't going to do this. And then I started really looking at some of the numbers and it didn't make any sense because we've been in the fear level for the last couple of weeks. You can see where
Mm.
we are the previous close a week ago. A
Yep.
month ago, we were greed. Now all of a sudden we're in fear.
Fear and fear. Yeah.
This is the EKG that's going on. But this is interesting. We are within 2% of all-time highs, but stock strength is at extreme fear.
Huh.
Stock breadth is at a fear level. So if we're 2% from all-time highs, why is there fear and extreme fear?
Yeah.
And then just going into a couple more things, this makes sense, I guess. Stock price strength is at extreme fear. That, I guess that makes sense if we're at a 39 fear. Stock price breadth is we're at a fear level. Safe haven demand is at extreme fear. And of course, if all those are fearful, then at the junk bond level, people are putting money into there because they're getting 8, 9, 10+% yield
Yeah.
on it as a way of saying, if I go into a fund, couple get delinquent, who cares? I'm still getting my 8, 9, 10%. So
Sure.
the money has been pumping into that over the last 30 days. What are your thoughts on this? Because
We have,
this is confusing to me.
interestingly enough, it's actually I haven't looked at that index, but the trading strategy that I have is actually we're almost 25% in portfolios in junk. And it's been that way for the last probably 2.5, 3 months. And we've done extremely well. We were in junk early last fall, and then we got out of it because I thought it was a little pricey, but it just keeps being the place to be at this point. even though you're getting 5% basically on a treasury bond, taking no risk, I think people are still wanting that the extra juice that they get. And you're not seeing it really from the dividend side of the market. Dividends really have not been great. They've not, I always love the dividend aristocrats. And I was looking at, maybe I could take some of our profits and shift some of that to dividend aristocrats. And I thought the funniest part is you start looking at the top 25 dividend aristocrats, and their stocks have been down for a year and a half, like precipitously down. Not, okay, it's just been flat and you're earning dividends. Why would I want to be in that? At least with junk bonds, I'm like, they're not really supposed to go up much in value, but you're earning that extra dividend. And I think you're taking a little bit less risk than I would be if
when
I'm in the
interest
stock
rates go
market
down,
getting-
they're going to go up in value.
Yeah. Yeah. And that's
Here's
the
the
other big
interesting
part
thing
of
I
it.
brought up about aristocrats. I just saw this last week. There was a dividend aristocrat that's been increasing their dividend for 63 consecutive years
Yep.
and just stopped the dividend.
Oh, ouch.
3M, Minnesota Mining and Manufacturing,
Yep.
just stopped their dividend.
Wow.
The
After
market
60
is
straight
so
years.
good.
Yeah.
And this one's been increasing dividends 63 years, longer than you and I've been alive.
That's amazing.
Sorry, can no longer pay out to the investors.
Yeah, we're not going to at this point.
Is that the canary? I don't know, but gee whiz.
No, we're taking that money and we're investing in an artificial intelligence to figure out better ways to create glue for our sticky notes.
I think, yeah, I was gonna say there are posty people.
Post-it notes, yep.
Oh my God. So yeah, I thought that was interesting.
Yeah.
So that's what I got for today. Something to look at maybe once a month, just to see where this is. But
yeah, I think it's been a couple months since we've looked at the fear and greed index. And I think if we had looked at it more often, it would have been like 1 week it's fear, 1 week it's greed. It's just snapping back and forth like crazy.
Here we are. We hit a bottom in April of a 5.5% pullback. And here we've come back 3% or so ish. And here we are. We're still at fear and extreme fear conditions within 2% of all-time highs, and we're up a little bit today.
Yep.
Yeah, I'm not throwing my arms in the air yet. We're managing portfolios. We got to be smart about things. How do you put money to work today begrudgingly? You have to do it. It's tough.
Fear and, well, like I said, fear and extreme fear, and we've just blown through the 50-day moving averages and on the way back up. And do we get to all-time highs and keep blowing through? I don't know. I don't know if we're going to be range bound here through the election or if we're going to continue to see this thing climb. But once again, you got to make hay while you can. But I think you have to pay really close attention to what's going on in the markets if you're managing your own money. Because I know Ron and I are having to do that with our own client portfolios. If you're managing it by yourself, you've got to pay a lot closer attention now, because this can move very quickly against you if you don't pay attention to it. But if you react to it too fast, it can, snap back against you.
Yeah. Till next week.
It's a challenging time, but we will keep being here. And that's why we do these shows for you, so that you guys are up to date on what's going on. We don't have an axe to grind here. We just report the facts as we see them and give our opinions of it. But we're not sitting here on CNBC coming on and babbling about useless crap that we have no idea what we're talking about at that point. So folks, thank you. Make sure you subscribe to the channel. Make sure you hit that little upvote to let us know that you exist out there. And more than anything, give us a comment if you have any questions, comments, anything like that. Love to hear it. Once again, we're trying to keep these shows a little bit shorter so that you have time to consume them. And on a quick few minutes, you can pop on and see what we're talking about that week. So thanks a lot, and we'll see you guys back here the very next time.